thanks for joining us today. Just want to let you guys know that we really pride ourselves on having great speakers at our events, and most of the time, not all the time, but when Dan looks over the speaker roster, he'll send it to me. I'll approve it or not. We do at times reject speakers because their system doesn't work or they're full of garbage, and or we get really bad feedback. So we really filter out and try to bring you the people that work, the systems that work, the instructors that work. So it's just not, here's someone talking about this thing. We really try to make sure it's a working system. And what you're going to find is that some systems just don't resonate with you and what you want to do. Other people, it just hits home. And when it comes to trading, it's all about, hey, Robert, good to see you. It's all about fitting the right system with your personality. And I'll tell you, not everyone's supposed to be day traders. Not everyone's supposed to be option traders or futures traders. You got to figure out what's working for you. Maybe you're trading in a 5-minute time frame, and you should be trading in a daily time frame. And it's funny because I laughed when Fausto said this, because it's all relative. He said that day trading is easier than option trading, and I'm going to say that whatever you're best at, it's going to seem easier and seem normal because that's your natural time frame. So don't think one's easier than the other. It's more of an issue of what fits your personality better. And that's why we have a plethora of different speakers that talk about different things, so you can fit the right system for yourself. And that's what I'm going to talk today about, is another time frame. So today I'm going to talk about bonds. And the first time someone told me about trading bonds, I was like, wow, that must be really sophisticated, complex stuff. It must take a ton of money and must be really hard to learn, and only the best traders trade bonds. Well, like anything else, you dig into it a little bit more, and it couldn't be furthest from the truth, and that's bonds are actually pretty easy. You just got to know how to trade them. And I know some of you are thinking, okay, well, what are you going to show me today? Well, I'm going to show you a trade that I like to take every single morning. What I'm known for and what I'm very good at is taking trades that happen at very specific times, and you're not sitting around day trading all day, and you're not glued to your screen, because it's so hard to sit at your screen all day and stay focused. Now, before I get going, you got to see, have you guys ever seen this screen before? Every time you go to any type of webinar, they're going to tell you that you can risk all your money and that kind of stuff. Yep, welcome to trading. Anything you do in life has risk. If you open up a restaurant, if you open up a new business, there's got to be risk. So I think you've seen this screen. Go ahead and read it to yourself. And this will be on the recording, so if you want to reread it, go ahead. I'm not going to read it. So I'm going to get into day trading bonds. And what I trade specifically is the 30-year Treasury bond future. The symbol is ZB, and it's pretty much like the different futures you trade, such as the S&P, the E-minis. Basically, when you trade a future, it expires anywhere from 3 months away from the next expiration. And I love trading bonds. Why do I love trading bonds? Number one is the margins are only $500. Yes, you don't need a huge trading account to trade bonds. Only takes $500. Now, it depends upon who your broker is. Some brokers are more, but this is the best we've seen is $500 on your per contract. And yes, I am going to show you a trade that I take most mornings on bonds. Oh, don't even get me going on TF. Ever since the ICE jacked up their rates on the ICE exchange to what is $115, not a big TF fan anymore. There's other things to trade without gouging my students and every other people for getting the privilege to trade the TF. So this is a 30-year bond, the symbol ZB. Very, very liquid. Very liquid. Okay, so margins are $500, and every tick is basically one move. One move. The minimal move is $31.25. So that's pretty huge leverage compared to anything else you're trading. The CL usually costs about $1,000, and each tick is $10. So it's not as big a bang for your buck. Plenty of volume and plenty of volatility. And we like to trade things that has volume. Volume is very, very important. The chart is not as sporadic as oil or gold. And one thing I love about trading oil is oil can move. Gold can move. The 30-year bond, it's just a little bit slower racehorse. Okay? But every time it moves, you get a very nice rate of return on your money. And the breakouts actually work better with bonds. 6 is they're great for trading around news events. Why? Because I love trading oil, but when you have news events, it can get really sporadic, such as on Wednesday. You'll see the oil inventory reports at 11:30. Oil moves. Oil can move 50 to 80 ticks in milliseconds. When you have news on bonds, it will move, but it'll be generally a little bit more tame, a little more calm, and easier to trade. It's a reliable, there's reliable leading indicators you can use with bonds, and there's fewer games being played, and you know that there's games being played all the time, whatever you trade. So it's important that, well, the reason why that is because the 30-year bonds is traded all over the world. Chinese buy a lot of this stuff, and usually it's bigger movers. There's a bunch of larger traders trading bonds than anything else. So when they put an order in, it's a large order, and things move a little bit slower, and the orders are what they are. There's not as much gamemanship on it. So it's easier to make $1,000 on one contract compared to oil, because on bond with trading the bonds, the 30-year Treasury bill, usually they'll move 30 to 40 ticks in a day, and that's all you need to do to make $1,000. Very low slippage and really good fills. Now, if I compare how bonds work to other instruments, oil margin is generally $1,000, $10 per tick. The S&P 500, $500 with a $12.50 tick. The NQ, if you ever trade that, I love trading the NQ. There's a lot of good moves on the NQ. It only costs $500, but you make $5 per tick. Bonds, though, biggest bang for your buck, $500 margins, $31.25. Now, if you have Thinkorswim, which I know a lot of you love Thinkorswim, I do. They've got a great platform, and they're going to probably charge you about $5,500 to trade that. So, you know, it all depends on who your broker is. Now, again, I love Thinkorswim. They're a really great brokerage firm. I'm actually meeting with them next month in Chicago, meeting with their margin department. Hopefully go and see Tom Sosnoff, who's a good guy. And they're great at options. But when it comes to trading futures and day trading, you can find better platforms. NinjaTrader's not the only one. There are half a dozen other brokers out there that'll give you the same margin. So NinjaTrader's not the only game out there, but they make it really, really easy. But I like to trade bonds with NinjaTrader. NinjaTrader brokerage, they do a fantastic job. Okay, so biggest bang for your buck. So it's also cheaper. Actually, I should say it's more strategic, and it's part of our game plan that when I do trade bonds, I always like to trade 2 contracts because it's safer and easier than trading 1 contract. Now you're saying, John, how in the world can it be safer trading 2 contracts versus trading 1? If you trade 1 contract, you have 1 exit and 1 stop. That's your only option. Now my first target when I show, and I'm going to show this trade to you in just a little bit, so just get ready for it. My first target is 4 ticks, which is $125. So you're effectively getting plus what, over a 20% rate of return on your money, just getting out on your first tick or your first contract. Not bad. Second target, I'm going for 8 to 24 ticks, which is $250 to $750. So the second contract is where we really start to make our big wins and our big runs. The first contract that we trade with bonds is basically to reduce risk. It's not that hard to get 4 ticks on a trade on bonds. Not that hard at all. But if we can get into a trade, and again, there's a lot of math behind this, but if we can get in a trade and get our first trade off at 4 ticks, we basically put ourselves in a break-even situation, and we've now given ourselves permission on that second contract to hit a home run. Because whenever you trade, if you're going to risk $1, you got to make at least $1. If you risk 1, the goal in trading and where the big money's made and how careers are made is you risk 1 and make 5. So you're getting multiple rates of return on your money, and that's what helps make you successful. The trade I'm going to show you, people love it because, not everyone has all day to trade. But I'm going to show you a trade that basically lasts for 10 to 15 minutes, and you're done with the 30-year Treasury bill. You're going to love it. Now, my stop is 4 ticks. That's it. 4 ticks of risk, which is $250. And let me back up one more minute. Guys, if you're a brand new trader, I don't want you to be trading your money. If you're a brand new trader, you need to learn how to trade properly in simulation. Then you go from simulation, and I have a firm that will help you get funded to trade. And it's crucial that as a new trader, you do not trade your own money. You're not ready for it. It's like you're fresh out of school, and you think you're going to knock the socks off of things. You need to get practice, and I'll just be honest with you. It takes time. It's a skill, like anything else. But the skill the trade I'm going to show you, you can go home and practice this weekend and start getting the practice you need to do it live. Minimum account, I would say it'd be $5,000, Mitchell. But again, I don't care if you got $10 million, I would still not trade your own money to begin with. So we got a good risk-reward ratio. We're risking $250 to make $875, which we're tripling our money, which I love. Okay, so here's the trade. I'm going to show this trade to you first in an abstract form, real simple. Then, once we understand that, I'll bring up a chart and show it to you with a real chart, real data, and something that will make a lot of sense to you. So the bond market opens up every morning at 7:20 Central Standard Time in Chicago, 8:20 a.m. Eastern Standard Time. If there's news, we skip the open. So I'm going to write these rules down to you. And if there's no news, we trade at the open. So the open happens at 8:20 a.m. Eastern Standard Time. If there's news, and this is where you find news, actually, let me bring that up. I think it'd be helpful if I showed you this where I find news real quick, because news is a very subjective answer, right? All right, so here's news. This is the NASDAQ.com markets news site. We don't want that. All right, so shut those down. Okay, so what's news? You see how you have these red dots? We got employment, we got jobless claims, and we got international trade. basically jobless claims and employment situation will move bonds. These are my top two. So pretty much most Thursdays and Fridays, I'm taking this trade at 8:30 a.m. Eastern Standard Time. International trade, not as much, but when I see these red dots, these are generally movers. So jobless claims, employment situation, these two items is when I'm going to take this trade at 8:30. So that's how I define news. So let's go and let's get to the fun part. Let me show you the trade, because this is where people just love. People are always, show me the trade, John. Show me a new trade. Show me what I can do. Okay, I'm going to show you something really powerful. So it's a very powerful trade. So again, we're trading ZB, and I'm on a 1-minute chart, and here's what happens basically. And I'm going to write 8:20 a.m. Eastern Standard Time. Well, let's just say for fun that this line represents 8:20 a.m. Eastern Standard Time. So here's what happens Monday, Tuesday, and Wednesday. You'll see this happen all the time. Same thing will happen with that, Melissa, with a 10-year. We're trading the 30-year. So what happens? Generally, before the open, the market will trend a little bit, like so. And then all of a sudden, 5-10 minutes prior to the open, the bond market will start to slow down a little bit. And it'll start to trade in a trading range. Again, each one of these marks represents a 1-minute chart. And what happens is, as we get closer to the open, it creates a range. And you'll see it create a range. And so we like to mark the high and the low of that range. And at the open, what we're going to do is we're going to place, we're going to find the high, we're going to go one tick above it, and we're going to be placing what's called a bracket order. We're going to buy one tick above. And we're going to go below the low, and we're going to put a sell order in to sell. So we're simultaneously putting two orders out. One to buy, which we take to go long, and one to sell, which we take to go short. Pretty simple, right? So we're not guessing direction. But what happens at the open? Well, a flood of orders comes in. And it's almost as if, you know, let's just say you had you have a flood of orders to buy and to sell. And most of the time, it's an uneven balance. There's either more buyers or there's more sellers. So we're not guessing which way the market's going to go. We just go with which direction the market's going to go. So basically, at the open, we're putting an order in one tick above to buy, and we're just going to take it long. Our first target is going to be 4 ticks. And our second target will usually be about 28 ticks. And then we'll have a stop down here at -4. So we have our stop, and we have our targets. Target 1, target 2. Real simple, right? So how many of you would like to get up early in the morning, for some of you? I know we have people all over the world. I know you guys in, actually, I think you guys in California who get up at 5:20 to take this trade haven't made, but that's just me. But how would you like to do that? So when do you actually put the trade in? About a minute before 8:20, so about 8:19. So yes, we are bracketing the high and low of around 8:15 to about 819. We're bracketing the high and the low. Okay? So we're basically putting in a bracket order. Now, once you see this trade in action, you're going to realize, for those of you who've been trading a long time, I can't believe I've left this money on the table every day. I can't believe I didn't know about this trade. Why haven't I been doing this? If you just trade one contract, or actually I would recommend two, but at the bare minimum, this is $125 sitting out there that you can take advantage of every single day. And I don't know about you, but an extra $125 is worth taking the trade, right? So let me show you an example. So I'll bring up, oh, I don't want that. I will show you an example. There we go. Okay, now the bottom of my screen, I live in the Central Standard Time Zone, so you'll probably notice that it says 7:20 in the morning. Well, that's because I live in the Central Standard Time Zone. So here we go. This chart is the ZB, and it's a 1-minute chart. This blue line represents 7:20 in the morning, Central Standard Time. And it's something that my system actually puts on the screen for you every day. So what do I like to do? Now, some days are a little different, but anywhere from 3 to 5 minutes prior to the open, I'm bracketing the high and I'm bracketing the low. I'm putting a buy to go long, and I'm putting in a sell to go short. How hard's that? When the bond market opens up, look at it just take off. Look at that, beautiful. It went from, and actually, let me back up just a second. Let me show you what a tick is, a tick movement on the bonds, because that's probably one thing you're really wondering, right? Okay, so watch this. So if I go from 163.00 to 163.01, whoop, that's a 1-tick move. So just going from these increments, $31.25. How do you guys like that? Pretty cool, isn't it? That's how powerful and leveraged bonds are. So let's back it up just a second here. What if I were to get a full point? What if I were to go from 163 to 164 and get a full point? Okay, so this, from going from here to here on one contract, is $1,000. How cool is that? Look what it did just, this was yesterday. Look at this. Took off, boom, up you go. Yeah, that went 24 ticks. 24 ticks in no time. Not bad. We love to reduce risk. Okay? Depending upon what kind of market you're in, the markets do change. This is a 70+% winning system. When you take your first, let me back up a second here. When you take your first, the way we've increased our odds on this trade is there are some days where the market will move up a little bit, move down a little bit, and then take off. That will happen. If that happens, that's why we have a 4-tick trailing stop. Most of the time, one of the little nuances with the bonds is generally, before it does this little fake move, you'll be able to take 4 ticks off. So if we win 70% of the time, and we can get our first 4 ticks off, you've got that 30% of the time where you lose or break even, right? It's going to happen. You're going to lose. So how do you reduce risk? Well, because it has such a high propensity at the open to get 4 ticks, when you do have that whip move and it just decides to go the other direction, guess what we do? We've reduced our risk, and it may not work 30% of the time, but if we can cut this 30% time in half to where 15% of the time we've got to break even, it changes the game dramatically. And that's why we have that stop methodology. You don't trade news at all. News is great, guys. When you get news events, it's so easy. It's so easy on news events days. It just takes off one direction or the other. So yes, we place the trade simultaneously. And here's how it looks. Let me just show you what a simultaneous trade looks like. All right, so let's just say for fun that right now the open's going to happen, right? So what I'll do is we'll place a buy order and a sell order simultaneously on the chart, and we'll bracket it. See how I did that? With bonds, slippage is very minimal, and that's what I like on it. Initial stop is 4. I'll show it to you what I use for my ATM. So what we'll do is our initial stop loss will be 4 ticks, and this one should actually be 28. So this is how we'll be set up with our movement. Now, once we hit 4 ticks of profit, we're moving our stop up. We want to limit our risk. But slippage is very, very small when it comes. Now, let me show you something interesting as how we trade. Let's just say we get filled. And again, I'm in simulation, but I want to show you something how we trade. Because whenever you trade, you must always, always, always have a stop order and a target order placed whenever you trade. If you do not have a stop order placed, it can be suicide for your account and suicide for your trading. And I think just for fun, I'm going to just get into a trade. Okay, there we go. So what you'll see happen is when we get into a trade, this amber line represents where we got in. And again, I'm doing this for new traders because new traders don't always understand how the computers work for us and how we handle that. So this beige line represents where we got in. You see that little blue arrow. This red line represents our stop. So right now what this is basically saying is from here to here, that's how much risk I'm willing to take on this trade. This is my risk. From here to here, that's my profit. And as price moves up, we're going to take this risk and move it up automatically. Okay? So you see how it's starting to move up? As that moves higher, guess what we're going to be doing? We're going to take our risk and minimize it. And you see how as this thing moves higher, our risk is getting smaller? That's the name of the game. And that's how we do it. And if I zoom out a little bit, you'll see that this is my first target right here. T1 is target 1. This is my second target. Why do I have such a big second target? Well, bonds will generally move that much at the open. The 30-year trend, or the 30-year T-bond, generally loves to trend the first 30 minutes of the trading day, either up or down. And guess what? We will take this first trade off, reduce our risk, so we have virtually zero risk, and now we have all 100% upward potential. If someone asks you what you really do as a day trader or a trader at all, you manage risk. You're a risk manager. And if you're going to be successful trading, you need to be able to manage risk, and that's how we handle that and what we do. Now you're going to get days such as FOMC, and those days, I'm going to tell you, don't trade it. Don't trade FOMC. It's too choppy. It's a bad day to trade. Okay. All right. So I'm going to answer some questions going on here because I got a lot of people very, very interested in what's going on. All right. Okay. So news events. So if it's a news day, instead of opening up at 8:30 or 8:20 a.m. Eastern Standard Time, we move it to 8:30. That's basically what we're doing. Yep, we put a buy stop and a sell stop at the same time. Okay, initial stop is 4 ticks, Chris. And some days, if it's trending, I'll actually just do the last 3 bars before they open. Just note that. All right, could you explain? The winning percentage on one lot is about 70%. How can I step that up and toss? I don't know what you're saying there, Robert. Oh, today, how do we do it today? Let's take a look at it. Let's take a look at today. Now, was today a news day or wasn't it? No, usually Wednesdays, 7:30. All right, so here's today. Basically, you mark the high, you mark the low. Now again, if it's trending, I'll generally pick the last 3 bars. So we're going to be right about here. So I'll pick these last 3 bars. This is a huge move. This went from 29 to 17. So when you get that, it's a little bit more challenging. Today it went 8 to 6. It went 2 ticks in this direction. Today actually was pretty choppy. You probably would have lost 2 ticks on today. Confused about the open versus news comment. There's almost always some sort of news at 8:30. Yeah, again, Lisa, there's important. I'm going to tell you the news events that you want to look at. You want to look at jobless claims, and you want to look at employment situation. These are your top 2. Now on Wednesdays, you'll have the 30-year bond announcement. That's also a news event. You don't always get this sometimes. Yep, 4-tick trailing stop. See, what happened today is, looks like some news got slipped out early. That's what happened today. But this is generally what I see happen, and I'll show you. And what I want you to do is, I want you to go look at your charts, go back, look at 4 or 5 days, but you'll see this type of movement. And if I add volume to this, which is a key factor, you'll see the volume come in, and that's a whole nother topic. They were great moves, but Arthur, I'm just telling you, statistically, it can be really choppy. And I just step back. At what point, hold on, I gotta freeze this here. There's a lot of people in the room today, and your questions are just flying by so fast I can't even read them. All right, I've been doing this for several years. Okay, I think, okay, let's see here. But 15 to 20% of the time I'll lose the full 4 ticks, Randy. The buy and sell order is placed 1 tick above, 1 tick below where the indicator will mark the bars. And the indicator will mark it 4 to 5 bars high and low prior to the move. You're having problems setting up the targets on toss. I can't help you there, Robert. I'm not an expert on toss when it comes to that. When it comes to option trading, I can answer pretty much most of your questions. Okay, do I use some type of trailing stop order? Yes, I do. I'll generally keep it on that second contract. I'll generally keep a 6-tick trailing stop is what I'll generally do. Sometimes I do get stopped out for profit. It all comes down to the wiggle room, and that's a whole nother discussion, because there's days when, a lot of days you're going to get this initial thrust up, right? You're going to get that. But there are days when it will climb like this, come back, and go up like this. So what I'll do is I'll let price come up, pull back, and once this pullback happens and it starts going back up in this direction, I'll measure that distance from here to here, and that will be my stop. Is what I like to do. No, I go long or short. David, I simultaneously go long and short at the same time. So what I'll do in this example is I will put in a long order here to buy, and I'll also put in a sell order down here. Because guess what? I don't know which way it's going to move. I don't know. I let the market decide that for me. Okay, so that's what I like to do. You can set this order up in Thinkorswim. I just can't tell you how to do it. Give them a call. Here's my ATM strategy right here. Stop loss of 4, target 28. Robert, I can just tell you from trading this pretty much most days that getting 24 ticks is not hard. I don't do an OCO. I do not do an OCO because sometimes it goes in one direction and comes back in the other one. Okay, why does it say 7-tick trailing? Well, basically, here's what I'm saying is once it hits 4 ticks, my stop is -1. And then as it goes 5, 6, up like that, I'm trailing it by 7 ticks is what I'm doing. ZB, the bond pits open up at 7:20 a.m. Central Standard Time, 8:20 Eastern. Do I reach my 28 tick second goal? I'll reach that a large percentage of the time. So do you immediately cancel the short order? No, I keep it out there. I always keep both orders out there because there are days when it will go up. It'll go up 4 or 5 ticks and then goes all the way back down. Okay. So a 7-tick trailing stop, what does that mean? I'll show you real quick, and then I'll move on to the next part of this. Is if I get in, actually, let's do it this way. So here's what it basically means is, right now, I am 4 ticks away from price. There's 17, there's 13, right? So here's what it means. Is as price moves in this direction, it's going to trail between where price is. Let's say price is here. This stop will be -7 from this location right here. And as it goes higher, guess what? My stop will remain 7 ticks away from where price has been at its high. Okay? That's basically what you do. So I'm 1 tick above and 1 tick below the range. This is the way I have it set up. Stop strategy, I'll show it to you guys. That should be 4. See that? That's my stop strategy. So once it reaches 4 ticks, this thing's moving up. We have a trade long and we have a trade short simultaneously is what we have. Okay, so that's my stop strategy. And then you'll see this thing, as price moves to this location here, you'll see this stop move up automatically. Now we got to give some room to move. It's going to fluctuate. So here's what we got going on, is we have 2 contracts, which is moving in this direction is our goal. We're getting our first one off here and our second one off at 28 ticks. So what I want you to do is go ahead and go back in time and look at your bond chart. Again, let me show you what we're trading. So what you want to do is you want to bring up the ZB. And the current one we're trading is the June contract. Okay, ZB June. And then I want you to go back, and let's just go back in time. I'm going to close this out. Go back and just look at what happened. Let's go back a couple days ago. Okay, here's a trade that occurred right at news. Okay, you got your high, you got your low, you put your long in here, got your short right here. Boom, nice move down. And here's why you keep both sides on. You made money to the downside, right? But look what happened. It came right back up. You take it long. It's called the double header day. So go back, look at your daily charts, look at 7:20 a.m. Central Standard Time, 8:20 Eastern, and look at the trade. Very, very consistent. It will work for ZN also. Yes, it will. It'll work for the 5 and 10 year. Okay, you can actually use limit orders a lot of the time, Joe. Limit orders are fine because this is such a big. I mean, look at the volume we got coming in. We got 3,000 contracts. You know, that's pretty decent. I'll personally use market orders half the time. Some days I'll use limit orders. When we have news days such as 30 when we have news days such as Thursdays and Fridays, I will generally use market orders on the news days. On the regular open, I'll generally use limit orders. So great. I like the 30-year better than the 10, TJ. That's just a personal preference. So when I trade, I like to really trade at specific times. I don't like to watch the markets all the time. You know, it's a great way to trade. Now, I've just opened up the tip of the iceberg for you guys with this trade. And you've learned a lot about the advantage of day trading bonds today. But there's still a lot more to learn, and there's just not enough time in 1 hour to show you all the nuances, all the stuff I do on it. So I've kind of opened the door to a whole new way of trading for you. So I want to invite you to check out a 3-hour trading video that I did on the 30-year Treasury bond, and I'm going to go into a lot more detail on how to take the trade and powerful trading system. Now, you could just take what I've learned and you could practice it, and you could probably do just as well, but let me cut that educational time and costly time down by about 100-fold, because I go into much more detail. There's more nuances. There's more to learn about this trade. Again, I've just opened up the door for you. So I'm going to teach you 2 specific trades that work very well using the insights from order flow. Frontier Airlines or Frontier Communications? Probably Frontier Communications, huh? Glad to have you here, Lee. So I want to introduce you to the bond trader, how to trade the 30-year Treasury bonds. And here's what you're going to learn. You're going to learn 2 specific trade setups that I use to make a killing on the 30-year bonds most every day. How to triple your profits versus trading oil, and the best trading time to make as much as $1,000 in one contract in a single trade. Again, you've got to practice this. Practice, practice, practice. And how to keep your losses small using intelligent stops. And why the same trade setups you use for CL, TF, NQ, and YM work better on bonds. Which other markets act as leading indicators? Yeah, there's other markets that will tell you which direction bonds will go. And how to predict when price is about to explode in either direction. When to stay away from a trade and avoid getting whipped out. When you register today, you'll get the following 2 exclusive bonuses. Bonus 1 is my order flow X-ray. And this is a 3-hour training on how to use OFA, which is order flow analytics, and it will show you what's really going on between the buyers and the sellers. This does not include the indicator. See the path, and I get past all the BS, guys. $600 value right there. Bonus 2, 30 days in my time trading room. Guess what? I have other trades that happen at very specific times a day that are very, very consistent. Wow. Your trading room is only about 45 minutes long? Yes. Why? Because you don't need to sit down and trade all day long. Why not just take the best trades that occur all day that happens at specific times a day? It's a way to do it. Eric, I will show you firsthand on how to pass that combine. Absolutely. We have people that I've trained that have passed the combine with what we do. I trade live. I'll trade the CL, oil, the NQ, the ZB, ES, and more, and learn how to hit your daily trading goal in an hour or less. Guys, it's not how long you trade, it's how effective you trade for the time you trade. It's not difficult at all, not at all. This is a $377 value. So how much is this worth? Add it up. The Bond Trader online course is a $1,000 value. Bonus 1, the Order Flow X-Ray course, is $600. Bonus 2, 30 days in my trading room, is a $377 value, which is a total cost of $1,997. But don't worry, I'm not going to charge you $2,000, but it's well worth it. And I want to make this doable for everybody. And I'm not going to charge you $597, which is what Bond Trader course originally sold for when we first started trading it. The bonds I believe trade 24.5. If you sign up today, you get the Bond Trader on-demand trading course along with these bonuses for just $297. So we've made it really easy, guys. $297. I'm going to start opening the door to Pandora's box and show you how to do this. And that's why I had the guts to show you a trade that you can look and its own past historical performance and provide for yourself. Well, thank you, Robert. Appreciate that. You'll find, Robert, that when I train, I train it in such a way where it's almost as if you and I are old college buddies, and we're going out to dinner, and I'm showing you very simply and easily how to do stuff. I've had a lot of bad instructors in my life, and I've had very few good instructors, and you'll find out that I have a great ability to simplify and to keep it easy to where anybody can understand it. Because I don't care about acting sophisticated. I don't care about acting, pompous and egotistical and all that kind of garbage. You know what? I care about breaking it down to its simplicity and showing you how to do it so you can replicate the same thing as I do. And that's how I do it. I only go back 5 to 8 minutes, Michael. If you're the first 25 people to register, I will triple my trading room time. So come into my trading room for 3 months if you're the first 25 people. And I will guide you through and answer your questions. So I really don't do any one-on-one support anymore. I will do that for some of my boot camp traders who come and join me for a 4-day boot camp. But if you have questions on the course, if you have questions on what we're doing, that's what we do in between trade times in our trading room. So I'm here to help you in the trading room. Ask your questions. I'm there to show you and wrap with you and get your questions answered. The triple action bonus is a $600 value. So register today at WINvesting.com/bonds. Do you trade any of the softs? I don't know what the softs are. Okay, guess what? You got nothing to lose. I will take all the risk out of your hands. And this is my 90-day no BS action guarantee. Take 90 days to study the course online, trade the ZB at least 2 days a week. Just show me you're taking some action. Just show me you're doing something, not just putting it on the shelf, right? And guess what? If you don't make $5,000 in real or simulated trading account after 90 days, show me you took some action. I'll give you a refund. Okay? I know trading is not for everybody. If it just didn't work for you, just show me you took some kind of action, and I'll be happy to give you your money back. So I make it real easy. Go to winvesting.com/bond, and let me see you in the trading room next Monday. Thank you, Robert. I appreciate that. You know, Arthur, I do not trade soy. I do not trade corn, but I am very concerned about corn prices at all times. I do watch the corn markets, by the way. Yeah, and Eric, I will show you how to pass the combine. In my trading room, I show you how to get funded. If you have a funding problem, if you have a capital problem, if you don't have enough money to trade with, the first thing I say is don't trade your own money. You're not ready for it. And not many people are going to be honest with you and tell you that, but it's the truth. You're not ready. You know, you get out of the 4-year medical school. I think you're ready to cut up a body. Absolutely not. You go to 4 years of residency, right? Cool. I'll see you, Gunter. See you at 8:50 a.m. Eastern Standard Time on Monday. Guys, you're not ready to trade live money. I'm going to tell you that. If you're not making money right now, the worst thing you can do is trade live money. Let me show you how to get funded. Let me show you how to use other people's money trading, and then once you're good with their money for 6 to 8 months, then consider trading your own money. But you're not ready for it. Trading is too hard. It takes time. It takes dedication. and you got to practice. And I don't know anything out there in life that is easy, that, people will try to sell you the systems and make them look so easy. The red lines cross the green lines, and all your chakras align. Guess what? Most systems will work. Most people are not willing to put in the time and effort, and I'll just be honest with you. But I make it real easy because I'm going to tell you up front, number one, you're better off trading other people's money, and I'll show you how to get access to that. It's very important that you take that route. So your Amex is not working, Robert. I don't know what to tell you. Dan, if you could help out Robert, that would be great. We do accept American Express. But watch me do this live. I mean, you're hearing me say all these things. You know what? Put your money where your mouth is. Let me see you do it. And then once you see me do it, you're going to say, wow, I know I can do it. So that's what it's all about. You tried 2 times, but it didn't accept your Amex. Okay. Dan, if you could get a hold of him and maybe just do it manually and help him out, that would be great. Hopefully you're there. Go to support@winvesting.com and we will help you out, Robert. I can't tell you right now if you got one of the 25. I don't know, what number are we at, Dan, right now? We have a few. There's a few open. We have a lot of people in this room today, and over 1,000 people signed up for this webinar. So I'll tell you what. I will open as long as you get your order in by 4:30 Eastern Standard Time. I will make sure that you get that 3-month deal. You're going to want to see me in the room for 3 months anyway. You really are. I mean, in my trading room, I'm not there to entertain you. If there's nothing to say, I'm not speaking. I will tell funny jokes once in a while. I'm not politically correct ever. So if you're a politically correct person, then you're probably not going to like me. But what people say about me in my trading room is I get to the point, I show you the details, and I show you what I'm looking for. See, when I take a trade, I'll show you the trade, and you'll see it on my screen. Just like this. When I'm in my trading room, you're going to see my order out there just like this. You're going to see it, okay? And you're going to see it well in advance of what's going on. After the trade, I will debrief you, okay? If I saw something really specific, I'm going to debrief you. I'm going to talk about it and say, hey, guys, here's the trade. I talked about it ahead of time, and then after the trade, I'm going to debrief you just so you make sure you learned one of the nuances that I teach. Randy, we will make sure you get all the bonuses, and we'll send you something in writing for you also. So it's a no BS trading room. You see my trades ahead of time. I'm just so sick and tired of these trading rooms that call trades out after the fact, and they don't show you the trade. They don't show you their stop. You need to see where my stop is. You need to see where my targets are. If you can't, you're not getting the information you need to be successful. I'm just telling you. That's what you need. So I'm going to wrap it up here pretty quick. Last time, make sure you go to winvesting.com/bond, and let me see you Monday. We'll get started, and we'll start trading together. And I will have my son in the trading rooms at times. He calls the trades out also, and he does a fantastic job. So most of the time it will be me. Sometimes it will be my son, who's been doing this for about 4 years also, and he's a pretty good trader, I'll tell you that. And I hate to admit it, at times he's even better than me a lot of times. He will be home from Liberty University on Saturday, so I'll be looking forward to seeing him on Saturday. And my daughter, who trades also, my daughter trades with our prop firm. And It'll be awesome. So thank you, Mr. Shuck. Thank you for joining us today. I will see you guys next time. Dan, thank you for having such a great day today when investing. Great speakers. And again, look for a system that fits your personality. The order forms are not working well. All right, Robert. Looking forward to seeing you next week. Okay, if you're having a problem with orders, then email us at support@winvesting.com. Dan, if you want to shout that out to everybody, I would appreciate that, and we'll figure out a way of getting that working for everybody. So I apologize if there's a technical issue. Thank you, Robert. Good to have you here. Thanks, Arthur. So we should have a full room. I do limit the size of my room because if it gets too big, we do move markets, and I don't want to move the market and make an unfair game for everybody. All right, very good, Arthur. Very good. I'm going to just leave the room open for a little bit. Dan, I will give it back to you. Thank you for joining us today, ladies and gentlemen. It's been fun, and hopefully you've learned some new things today that will better your trading. It will be on Monday at 8:50 a.m. Eastern Standard Time. Very good, Mary. I'm glad you appreciate the quality. No BS day. We don't like it. We don't like it. So, Dan, I'm going to put the room back to you. I'll leave my screen up. You grab it when you want, and we will go from there. But thank you for joining us today, everybody.